Welcome to the Zanaco Economic Review and Outlook for the first quarter of 2021. Zanaco has been providing you with the economic updates, the outlook for the year to help you make those informed business decisions. For this quarter, I'm joined by Gerard Soko, who is our economist at Zanaco. And Gerard will be providing us with developments at the global level, what happened in the global economic space, as well as what happened to our commodities market. And later I'll join him and provide developments in the Zambian economy, as well as providing our forecasts for growth in 2021.
Thank you so much, Patrick. I must mention from the start that despite an estimated 3.5% contraction in the global economy last year, actually activity returned to expansion in the third quarter of 2020. Speaking to the quarter under review, we saw the global economy continue recovering, and more so with an increased pace. Actually, the momentum of expansion in global economic activity was the highest that we've seen since the second quarter of 2018. There are three key factors that actually drove the upturn in the economic activity. These being the discovery of the pandemic vaccine, the continued easing of containment measures that economies around the globe had put in place, especially in the advanced economies. For example, the US actually marshaled a total of $1.9 trillion early March this year. Now, at the back of these three factors, what we saw was the strength in aggregate demand actually gained traction. To be specific, it was the highest that has been seen since the fourth quarter of 2018. And the aggregate demand itself was actually so strong that backlogs of work were seen rising at firms, and therefore forcing them to continue increasing their staffing levels. And this resulted in a trend in the unemployment rates in a number of countries. Going forward, the outlook of the global economy is very, very rosy. Just this year alone, the IMF has actually upgraded the growth number twice. It's now sitting at 6%. Now, with all these positive developments in the global economy, there were positive spillover effects in the commodity space. For a start, we saw commodity prices rebounding strongly. Specifically, crude oil prices were actually back to pre-pandemic levels. And the quarter-on-quarter increase in the price of crude oil was actually the highest on record. The factors mainly was, as I said, economic activities upbeat, and as well as restricted production by OPEC Plus members. The same was seen in the agricultural space. Commodity prices, food prices were up, and they were the highest we've seen in the last 7 years. But more interestingly for Zambia is developments in the base metal space, and more so speaking to copper. So copper continued to power its way up in the first quarter of 2021, having started in the second quarter itself, which saw the deepest recession in 2020. As the quarter drew to a close, copper was actually northward of $800,000 per metric ton. There were three factors that continued to feed into the momentum for copper prices. The recovery in the manufacturing sector being led by the number one consumer of metals, which is China. And the second one is we've seen increased efforts towards decarbonization of the global economy. You may wish to know that actually copper is an important element in technologies that help reduce carbon emissions. The third one is with the disruptions that we saw in 2020. Actually mining firms were faced with a number of challenges, and the copper output that was produced last year it was actually restricted, and that has created a deficit in the market. All those factors are pushing copper prices up. In terms of the future, and speaking to copper specifically again, the market is all bulls. So there are projections from JP Morgan Chase that copper may actually touch a high of $25,000 per ton by close of 2025.
Thank you very much, Gerard. That's an elaborate illustration of what happened on the global economy. And coming to the domestic economy, Gerard, and for the benefit of listeners, contrary to what was happening on the global economy, we started actually seeing the Zambian economy actually start facing challenges, especially after the onset of the second wave of the COVID-19 pandemic. We saw the positivity rate increase massively in January and February, touching a high of 14% rate for positive cases, and that had a very big impact on consumer movements. We saw quite a lot of a reduction in mobility numbers at shopping malls, workplaces, and that had a knock-off effect on terms of consumer demand for products that firms produce. In addition to the presence of the COVID-19 pandemic, we also saw long-standing issues continue to affect Zambia's firms. One of them is, for example, tight fiscal space really meant that government was spending less on new productive activities, and that led to a reduction in the demand for goods and services and aggregate demand in general in the economy. We also saw challenges with regards to the cost of production. The kwacha has been depreciating in the last 2-3 years, and that has pushed up the prices of inputs that go into the manufacturing sector, and that also negatively impacted firms. Disruptions in the value chain also negatively impacted productivity in the manufacturing sector and industry as a whole. However, towards the end of the quarter, we started seeing the brightening of some challenges that the economy was facing. One of them is a massive decline in terms of COVID-19 second wave pandemic. We actually saw the positivity rate drop all the way from above 10% to less than to about 1%. That helped to increase the mobility of consumers at Zambia's shopping centers, and that helped to ease the pressure on the operations of firms and improved cash flows. And another issue that really has been positive for the Zambian economy has been the issue you mentioned earlier, the booming commodity prices on the international market. By close of the quarter, we saw copper trading above 8,800. As late as last week, we saw actually copper touch the highest level in the last 10-15 years, with copper touching above $10,000 a metric ton. And that kept on helping the Zambian economy. The vaccine rollout also started in the quarter, especially in the month of March, and that has created a positive mood about the future dynamics of the Zambian economy. And one thing that we are looking at, the developments, especially in the commodities space, the rollout of the COVID-19 vaccine, as well as the improvements in terms of prospects for an IMF program, has actually brightened growth prospects for Zambia. So in this regard, as a team of analysts at Zanaco, we've actually revised the growth projection for 2020 upwards. We are actually now seeing a growth rate of about 1.6% compared to the earlier 1% that we were projecting in our Q4 report. And the key factors, again, we are hinging on is we are seeing a strong rebound in commodity prices. That should help an improvement in the external sector. We are also seeing a reduction in load shedding, especially after the onboarding of the Kafue Lower hydropower station. The good rainfall pattern, especially in the southern part of Zambia, we are expecting Zambia to have another bumper harvest. On top of these positive developments, especially in the agriculture sector and the mining sector, we are also taking a cue to the fact that that is also going to have a positive impact on developments in the transport and logistics sector, because copper as well as agricultural produce has to be moved from centers of production to either export destinations or locally the urban centers where these products are consumed. So we are likely to see an increase in the level of transportation business. We are also expecting to see more and more easing of restrictions in the second half of the year, especially as the world over increases the number of people who are being vaccinated. We could see a return of tourists in the second half of the year, especially in the fourth quarter of the year. And most importantly, it is our firm view that in the third, fourth quarter of the year, we might actually have an IMF program, and that is going to change a lot of fundamentals about the Zambian economy. The negative sentiments are going to disappear, and that should have a positive effect on the exchange rate. We could see a return of offshore investors, and we are likely to see reserves improve as a result of an improvement in offshore investment in Zambia as a result of the IMF program. So those are the few factors that did inform our projections for 2020. It is also important to note that our projections is largely in line with other forecasting agencies. The World Bank is seeing a projection of about 1.9%. The Bloomberg consensus projections are seeing a growth of about 1.7%. However, the IMF still remains a little bit pessimistic, and they are just expecting a marginal growth of about 0.6%. With regards to inflation, we saw inflation in the first quarter of 2020 continue to escalate. We saw inflation touch a high of 22.9%. Largely because of rising prices of consumer products, especially food items. Going forward, we are actually anticipating a moderation in inflation, especially beyond June in the second half of the year. We are actually forecasting an inflation of between 14 to 16% by close of 2020, largely because, one, with a bumper harvest, we are likely to see an improvement in supply of food items such as maize as well as mealie meal. We're likely to see a reduction in prices. I was actually just checking around when I was driving back from the Copper Belt over the weekend. I actually saw that maize prices have relatively dropped as early harvest starts coming on board. Then we are also seeing the recent moderation in terms of the depreciation of the Zambian kwacha to also help moderate the pace at which non-food inflation is going up. Lastly, we generally saw the macroeconomic environment continue to remain a challenging issue for the Zambian economy. We saw interest rates continue rising, largely because of high levels of inflation. We also saw an increase in credit risk, especially with regards to the poor performance of most private sector players, which meant that lenders had to factor in the cost of possible default on the loans that they extend to these entities. And with regards to credit growth, we also saw credit growth significantly reduced in the first quarter of the year. Actually, the levels of growth was in negative territory, again being explained by the lower demand for loans by the private sector because of the challenging operating environment that they faced. Also, we saw the lenders getting a little bit more cautious because you see that the levels of working capital needs actually went down, and as a result, banks were a little bit more cautious. The other factors were largely the cost of credit, which edged upwards, and that discouraged a lot of our borrowers to actually cut down on their demand for credit. Our review of the economy has indicated that in Q1 we faced economic challenges, and that had a negative impact on the performance of the economy. However, we expect a relatively brighter 2021, which indicates that the economy is going to grow by 1.6% compared to a recession of 3% that we experienced in 2021. We are also expected to see a relatively improvement in macroeconomic fundamentals, largely hinged on government accessing an IMF program. We are also expecting to see generally an improvement in the performance of the external sector. And for any other developments, we'll be sharing with you our review of the second quarter of 2021. For products and services that we offer, you can contact our Treasury Department for them to offer you various types of hedging products that you can use to manage your exchange risk, your interest rate risk, and also to make sure that you are able to access a transaction, foreign exchange transaction in a faster and quicker way. Thank you very much.